But for more trading strategies, we have Dr. CK Narayan and Mayuresh Joshi joining us, as also Anand Tandon for some closing market advice. Dr. Narayan, you go first. Anything you would trade now in the last few minutes for a reverse tomorrow or for a position?
Well, I think we'll have to catch on to something which has shown substantial momentum, and within that, I would definitely look at Siemens. The stock has pedigree, has dropped down into a decent level of support and has shown great amount of resilience in the rise. So even at about 1360, which is definitely off the day's lows, I would still look to buy this because I think there is substantial room on the upside. Reliance is another one which is showing a great deal of momentum. There was some news related to gas, to which I think the stock has responded pretty well. So I would definitely pitch my tent on the side of Reliance as well.
All right, Mr. Narayan, let's get Mayuresh. Mayuresh, what about you? What are you looking at? Any buy call on Tata Steel at these levels? It was at 370 just maybe around 3 to 4 weeks ago. Currently moving towards the 300 level. I've seen it jump off from there numerous times. Will you touch it or stay away?
Afternoon, Nigel. Clearly, I think the results have been a dampener for Tata Steel, both on the domestic front and the European operations as well. So the consolidated numbers are not great. They are not expected to improve drastically over the next few quarters as well. So clearly, I think the downgrades have come in thick and fast. We ourselves have downgraded the stock from our earlier 450 odd levels through 390 odd levels. And the logic is very clear. I think you're still going to see some amount of pain with the Chinese dumping still happening in the Southeast Asian markets. Tata Steel Europe still expected to report lower EBITDA to ton numbers. So on that sense itself, I think our take is that an accumulative still exists for Tata Steel. But again, I think on declines is something that I'll be suggesting Tata Steel.
Mayuresh, we are fast running out of time. If I were to give you half a minute, anything in the market's downtick that you would pick up?
So clearly, Latha, I think banks are offering a great chance to invest at these levels. So Axis, yes, is something that we continue to like, and even something like an LIC Housing Finance, which should hold up in terms of their asset quality going ahead as well.
Okay, now for where we are headed in the near term, the medium term and the slightly longer term. Anand Tandon, the markets are once again putting up a fight at that trading range goalpost of 8,050 or 8,100. What is the sense you are getting that this global liquidity will ensure the markets don't fall too much? Or do you think this is just a fight for the day and we are going to slip to lower levels sooner rather than later?
Well, Latha, if you look at the market, the way it's been behaving the last couple of days, it doesn't look to me that this is a very convincing fight back. So for the near term, you may get a bounce because it's been a fairly savage fall in many companies. But it is quite likely that the trend, which is downwards, will continue for a little more. If you were to look at it from the point of valuations, there is certainly more downside than upside. Because all said and done, we are still looking at consensus estimates for earnings to be growing at 17%, which I simply don't see how it's going to happen. So, if you were to knock that down and multiply it by 15, you'll probably get an index level on the Sensex at around 24,000 at 15 PE, which is not particularly low because, that's mid-range for where the PE normally trades. So that will mean that you are still looking at another 7-8% fall at least from where we are. Whether that will be reached or not is a separate issue. But, from a fundamental basis, I would argue that that would be a place where you would be comfortable buying. Anything more than that, the market is marginally at least overpriced. Near term, of course, as I said, the fall has been savage. So there will be many companies which would have reached levels which would be somewhat attractive. And therefore, it is not necessary that you have to wait for the market to bottom out before you can start buying. But you have to buy with caution.
All right, let's get Mr. Narayan, and then on that one, the Bank Nifty, in fact, has been under pressure. I've been noticing data for the last couple of months, and Kotak Mahindra Bank there, it's sitting with the least losses in the last 3 months approximately. Mr. Narayan, tell us, what's your view? Even today, in fact, Kotak Mahindra Bank is higher by close to around 1%. What's the outlook on this stock?
Well, I think Kotak has been one of those stocks which have been fairly resistant to declines, although it has peeled off from the highs. I don't think there's too much of trader patronage to take the stock down with vastly leveraged set of positions. And there is always this big amount of positive which acts as a cushion that somewhere down the line there'll be more perhaps sell off from the promoter, etc.
So I think Kotak, every time you see the banking sector come back into play, I think Kotak is one of the stocks to play. So I would always look at least over the near term, look at Kotak with a bullish eye, and would be looking to buy it every time it reaches down into support. It is now trading down into support, having got bashed down a bit along with the rest of the market. So whether I want to buy it tomorrow, that's a different question, because it is not really one of those with the highest amount of beta or the greatest amount of momentum. So if I want to play a market which is a little hesitant or which is a bit down on its sentiment, Kotak may not be the stock that I would want to rush into. There may be other higher beta stocks within the bank space. I would probably single out something like Axis or IndusInd Bank from the private sector space. But then, since your question was specific to Kotak, yes, I do think of it in a very bullish manner, but I would use lower levels to buy into.
Okay. Mayuresh, what would be your pick of the pack? We could only briefly squeeze in one answer from you before 3:30. Now that the market has given attractive valuations, as Anand Tandon was telling us, you don't want to wait for the entire index to come to attractive levels. Are there any stocks in the mid-cap space, at least, which are looking fairly attractive? That's where the big falls have come.
So clearly, Latha, I think the mid-cap cement pack is something that we prefer and we continue to like. The earnings have been disappointing in this quarter, and earnings might continue to disappoint over the next couple of quarters as well. But having said that, if one really has a couple of years time horizon, the realization should stabilize going forward. The raw material costs and the fall that we've seen thereof, I think the benign prices should aid the margins going forward. And again, I think once the utilization rates levels start going up, the return ratio should improve drastically for these companies. So I think the performance has been mixed within the mid-cap pack. But again, I think a whole host of companies is something we're liking. So JK Cement, based on 8 times its EV/EBITDA on the grey business, 7 times on its white business, on its installed capacity of 11 times, EV to ton of $85, I think seems pretty attractive. So any declines on stocks like a JK Cement, Mangalam Cement, our belief is that the opportunities are immense and the earnings will pick up from FY17 onwards. So yes, I think the couple of quarters will be a little bit on the softer side, but clearly with a couple of years time horizon, all these stocks should do reasonably better.
All right, Mayuresh, point taken. A couple of quarters, I think traders and investors are willing to wait, but longer than that, it's going to be quite difficult, even with those attractive valuations. But Anand, let me get you in on a couple of pharma stocks. Just having a quick discussion in terms of Glenmark Pharma as well as Sun Pharma. Both those two stocks, if you just pull them up, the price is approximately the same. The EPS estimates for this year as well is the same. But Sun Pharma has taken such a sharp knock, always trading around 30 plus times, while Glenmark has been trading around 23, 24 times. Which one would you go in for if you had to go in go into something from the pharma space?
Well, I think Glenmark for now looks like it is better positioned. Sun has some issues to tackle with regard to Ranbaxy, and as far as the technical position in the market is concerned as well. So if the choice is between the two, I would take a Glen.
All right, we have run out of time. Anand Tandon, Mayuresh and Dr. Narayan, thank you very much for joining us with some very fruitful ideas on how to tackle the days to come, especially after these troubled last 72 hours of trading.